Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on PCLN NVDA TSLA NFLX CMG. So PCLN bulls continuing extremely strong, and that correlation with SPY certainly helping out. All-time highs for both. Strong move to the upside. We've got resistance now at 2023, 2025, 2030. We're just walking it up on $5 increments in terms of psychological resistance. Our new higher low is established at 1990. And the bulls are in full control. Increasing bull volume. Perfect chart for the bulls. No slowdown. Holding exponential support for all of July almost. And if we lose that exponential support, we'll look for normal healthy consolidation. But as of right now, the bulls have absolutely nothing to worry about. If we break 1990, that will change things and tell us short-term consolidation is coming. But this weekly chart is in full-on breakout mode, as is the daily chart. A month of straight upside. And once we got that new all-time high, it was off to the races. Bulls in full control. Really strong chart. NVDA is consolidating still, but the bulls bought the dip a bit. They're very clearly trying to cling on to this exponential support and on the verge of breaking it. So we did take out a support level today of 163.91. Next level I'm watching is 161.30. Break 161.30 and we will see a loss of exponential support. We'll see a bearish TCG cross and likely a bearish MACD cross. So we're on the verge of a potential breakdown here, and we need to watch the correlation with all these other names in the sector. And we do have AMD earnings. We'll have to see how the market digests those AMD earnings in terms of pre-market and once the bell rings. But NVDA, the leader of the sector, is showing a flattening out, rounding top, and likely to see some further consolidation, as the S&P 500 has been very strong and is due for some consolidation as well. But the fact that SPY hit a new all-time high and NVDA is seeing this consolidation lets us know that we are likely to see some further consolidation. So on the weekly time frame, anything above 138.58 keeps the bulls in full control. So there's plenty of wiggle room here. And we did see a little bearish reversal hanging man last week, potentially confirming that this week with further downside. And we'll see if the bulls are able to hold these exponential supports tomorrow, although odds favor they won't. Tesla on the daily time frame today, gap up open and a big dump first thing. The bulls bought that dip and pretty consistently throughout the rest of the day held on to that buying of the dip with slow and steady gains to the upside. It was a back test and a hold of the daily middle Bollinger Band. Now the bulls have to keep that level. If we lose the daily middle Bollinger Band, that's a red flag on this bounce. But we need to see follow through. We need to see a break of the high that we've currently formed of 345.60, and I'm watching this target still 351.50 gap fill on the daily time frame. If we see weakness by the end of this week and a close under these exponential resistances in the 336s, that will be a clear red flag for the bulls, and we will be looking for some downside from here to backtest the weekly middle Bollinger Band support of 321.05. Netflix on the daily time frame, we've got consolidation. It's healthy at this point, decreasing bear volume, and a potential little bull flag pattern here holding exponential support as well. As long as we form a higher low compared to this base of support at 182.70, the bulls remain in control. We're going to be subject to other tech names' earnings, most likely, depending on what the sector response is. Facebook tomorrow, Amazon on Thursday, FOMCs tomorrow. We got all kinds of events that could certainly impact short-term direction here. So Netflix healthy still. Increase in bear volume would be a red flag. Break of 182.70 would be a red flag. If neither of those occur, bulls remain in control. Netflix on the weekly time frame consolidating a bit. Upper Bollinger Band hasn't even been back tested. 181.43 is that level. Plenty of wiggle room to remain in breakout mode on the weekly time frame. CMG shorts covering, no surprise there. When you see an all-out dump or an all-out breakout heading into earnings, you can anticipate that whoever has been in that trade is likely going to take some profit off the table rather than risk a gamble on what the earnings reaction is going to be. So bulls covered or I should say shorts covered today. Bulls bought some of the dip. We did see a bullish reaction to earnings after hours, and we were up in the 360s last I saw. So we'll see pre-market how we shape up, but we are looking for the bulls to see some upside. That being said, we can scout a bearish entry sometime in the next week or two, and we will watch for the bulls to tire themselves out on the bounce, and we'll be looking for a bearish entry because there's so many resistance levels. I'm looking at 390, 400 psychological, 423, so there's all kinds of resistance levels, and we will set a lower high here on this reaction to these earnings. We will see a likely bullish reversal candlestick this week, but even if we see a couple weeks of upside, we're nowhere near the exponential resistance. We haven't even tested the lower Bollinger Band resistance, so the bears are still in full control of the long-term trend. This is just an oversold bounce, so we can be scouting a bearish entry for that. I appreciate you watching. We'll check back in to see how it all plays out, and we'll see you tomorrow.